I preface this video with an understanding that people may be going through a very hard time financially during this market downturn and worldwide economic issues, such as losing retirement funds or even savings, and that I'm strictly speaking about my own financial situation, and that everyone should do their own research to understand their own risk tolerance and what investment strategy suits them best. My portfolio is down 19%, or $2,233 US. I figured there was no better way to open this video than with that. I preach transparency, and that has always been my goal with this account and these portfolio update videos. Recently I haven't been uploading much, but it's not to do with the market downturn. Like the case with many other creatives, it's not very sexy to talk about the shit hitting the fan. But I mean, this is more for my personal reasons. I look around at other financial YouTubers, and they probably lost millions, if not more, due to the sheer size of their portfolios. So when I grand scheme things, my position really isn't too bad. I haven't made many videos on it because I've been very busy with outside factors, such as starting a new job and full-time university. But I'm getting back into it and going to try to upload again more consistently on a more accurate schedule. Taking a quick glance through my portfolio, every position of mine is officially in the red, all 9 from 9, including all 3 ETFs. I guess the first position to assess would be SPY and VOO. These are both broad market tracking ETFs and have both found themselves down over 25% this year. And they are meant to be safe, diversified positions, so when you see a downturn of that size in such a short period, you can truly start understanding the negative turn that the market is facing. Although it's never nice to lose thousands of your own hard-earned dollars, this experience has come with very important lessons. I will be making a video coming out soon on the 3 main lessons I've learned from this experience. With all that's going on, the main thing on people's minds is what is the plan for the future? I know for myself, my plan has been adjusted, but in my long-term goal of my investment journey, it's still the same. I still plan on buying stocks and increasing my share in great strong companies that are proven and generate strong cash flows in the hopes of building wealth. When going through adversity or general tough times like these, I like to remember why I started this journey and why as a teenager I researched and opened this investment account when no one else in my family or even close that I had has done this or is doing this currently. It's to break a cycle and use my interest in finance and economics to find a way to help create wealth and discover another financial income stream which in hope would allow me to more freedom of time and more opportunities to enjoy the things that truly bring value to my own life. When I go through my portfolio, do I believe in Apple in the long run to bounce back and continue growing in the upcoming years? Yes. Do I believe in Costco? Yes. Do I believe in Google? Yes. When I look through it, the only position I don't have strong conviction in is Meta. My position in Meta has taught me a lot. I still believe in Meta and that they can be a great growing company that generates lots of cash flows through its advertising. And with my position already being down over 50%, I just really don't see a point in selling out. But overall, this market correction or market crash or whatever you call it has taught me some important lessons and have really checked me as an investor. I understand that my portfolio is nowhere near diversified enough. I'm still a believer that if you are truly believing in your investments, you shouldn't overly diversify. But at this point in my life, I cannot properly diversify into multiple asset classes. Like for example, real estate. I simply don't have the funds right now to go out and purchase an investment property or anything like that. So I can use my stock portfolio to invest in real estate companies and similar things to give myself a bit more leverage and balance. I'm not going to shy away from investing during these times, but I'm still going to be putting my own money into this account because I know I will not withdraw money from this account anytime in the near future. And my goal is to use this account to hold myself accountable and build wealth through compound interest and importantly, dividend payments. It's times like these when a tech-heavy portfolio like mine can suffer the most, but not just because their positions tend to be more volatile, but tech positions often offer a very low, if no, dividend yield. Meaning, when the market's in fear and the prices are retracting, you don't have that safety net of a consistent dividend payment coming in. I've been still consistently putting money into this account, Probably not as much as I want, but that's due to more external factors tying up my money. But when I look at my recent transactions, with tech stocks being heavily subtracted, and my belief in these companies in the long run, I have been purchasing in and increasing my position in them. But the main position I've been putting my money into has been VOO. This is continuing my diversifying and hopefully catching this entire market downturn in every sector I'm not in, while still growing my dividend payments from my current highest payer, which is VOO. For my next purchase, I'll be purchasing more dividend paying and tried and tested companies, even such as a Costco, or even others, but that will be on the next portfolio update video when I decide what to do. With that, I have spoken previously on how high dividend stocks can just be a red flag, and when investing for dividends, you should look at more than just the yield, also how the company as a whole is doing. If the dividend is growing, and if the dividend payments are sustainable for a long-term basis. So as I move forward, I plan on growing and diversifying my investments in dividend-paying sectors just for a little bit more stability. I recently saw on Joseph Carlson, another finance creator, who also shows his portfolio. His recent video, he mentioned how hard it was to see his 3 years of investing gains gone, and how his account is actually in the negatives, but his dividend income he has received over that time has kept him $3,000 in the profit. So that just shows there really is a short-term and a long-term value in dividends, even if there are people that say stuff like dividends are not tax efficient. Overall, I believe in this move into the bear market has been very hard for investors, and I hope everyone is taking time to research and look at what strategy suits them best, and hopefully we can all come out of these trying times as best as possible. This was just a quick recap on how my portfolio is holding up, just to remain transparent and touch base again to show that things aren't always in the green, and it takes days of gloom to appreciate the days of shine. Feel free to leave a comment on how your portfolio is tracking, and hopefully next month, for the upcoming portfolio update, things look a little bit better.